Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, October the 10th. So I am now one-third through. Sober October, no booze, no carbs. All right, so to be honest with you, with the carb front, I do put a little bit of cream into my coffee, a little bit. But I have to have it to get things going in the morning. So that's the only area where I cheat. But for the most part, down about 6.5 pounds since the 31st of September. So, so far doing good. Still need to keep going to the gym. Dropping weight wasn't the real goal. Ideally was to put on a little bit of muscle and balance it out, but I'm dropping weight. So let's begin with a little bit of housekeeping. One is I will be back tonight on TrenSpider. This will be my third time on TrenSpider. I believe I'm the most frequently invited back guest so far. There's a link below in the description area. Microphone. There's a link below in the description area. Please click that link. Join me tonight on the webinar at 8:30 Eastern Standard Time. And we'll have a blast. We'll have some fun. And what else? Oh, there's a survey. If you haven't already taken it, there's a survey down below as well in the description area on YouTube. Please take that survey. It only takes 2 minutes. No personal information. I'm loving the feedback. Really great stuff. It really helps me to gauge my future tutorials and how I structure my commentary, because now I'm understanding better who my audience is, and really it makes sense to do that, right? So I really want to build out the YouTube channel. I do want to put together a course going into 2020, and it really helps me to identify what the pain points are of traders, so that way I can directly address them head on, if that makes sense, rather than me divining, okay, this is what I want to talk about and hope that people want to watch it. It doesn't make sense to do it any way other. So that's that. I already have 2 likes. Thank you very much. I appreciate that. I didn't even ask. It really helps me out with the YouTube algorithms. If you're not currently subscribed, click that subscribe button, smash it, hammer it, destroy it, and then click that bell button, select alert all. That alerts you to my new videos and commentary when I do post them, and I appreciate that very much. Let's begin. All right, so overnight was really a volatile session for the markets. And CNBC, they are masters of changing the headlines constantly. This headline box here changes all the time. Last night at around, I guess, 7:30 Eastern Standard Time, the headline was saying, futures crash. No trade deal, whatever it was, and now it's been changed to Dow futures slip in wild overnight trading after report that trade talks have stalled. You know, what it's becoming more and more evident is that what the powers that be are doing is that they're taking advantage of the algos, scraping the headlines, and manipulating the markets for better or for worse. And last night, we saw it for the worst. And last night, I even put on Twitter, I was annoyed because I opened up a long position, disciplined approach, exactly as I wanted to do, and how I preach it yesterday afternoon on the Russell 2000, only to see that it was getting hammered in the after hours session. So gold and the miners were rallying, so I said, all right, I have far bigger of a position in the gold miners than I do on the small caps, so I'm not going to worry about it. It's being offset right now. I'll stop out tomorrow if necessary. So I posted this, S&P and IWM futures getting crushed on trade deal. Question, who in their right mind with a fiduciary responsibility based on their trade decisions this week on an anticipated trade deal that and no right-minded person expected. Nobody expected a trade deal except for the algos. They were set up for a small trade deal. It went from a big trade deal, highly anticipated, to this little itty-bitty trade deal, and they hung their hat on that. What the value of that itty bitty trade deal meant, I have no idea. But they wanted it. They prepped the market for it. They didn't get it. What did they do? They hammered the markets in the after hours. You can't make this up. You can't make it up. So for those that got taken out of their long positions, and anybody who was getting hammered after hours yesterday, those are institutions. They got hammered, taken out of their positions. Ha, ha. Good for you. You created this algo monster. Live with it. So here is the headline news that was moving the markets. Dueling U.S.-China trade headlines spark chaotic volatility in futures. And here are the headlines that you could see manipulating the algos higher and or lower. So I'm convinced that the powers that be are in fact using the algorithms to manipulate the market. In essence, you have trade negotiators sitting on either side of the table saying, look what I could do to your markets. And these are big boys playing. And I got some commentary on the survey about trading more. And, you know, I get that. I get that people want me to trade more to the long side. But, you know, in this market environment, I think that a good amount of my obligation to members is to say when not to trade. And I've been very disciplined. We avoided this downtrend in the markets almost entirely, with the exception of, I think, Angie's List, and which we held on to for too long, hoping for a short covering rally. And overnight we got long of, or yesterday we got long of the small caps. And we may feel some pain today, but I think that we are going to rally back here. So we'll go to those charts in a moment. Let's take a look at how you're being manipulated as well. What you're seeing out of the Federal Reserve are market initially shrugs off Fed minutes. You know, I didn't expect much out of the Fed minutes. All they do is talk hawkish, act dovish. So what's the lesson learned here? Don't listen to what they have to say. Look at what they do, right? Don't listen to what they have to say. Look at what they do. Case in point. Here's our headline: hawkish Fed minutes, markets sell off. Case in point again, FOMC minutes signal governors divided on whether to end policy easing. Then you take a look at the Fed balance sheet. This is going to be updated today, I believe. Let's refresh this. Maybe they already did it. No, not yet. This should be updated today. And I fully expect that we should be flirting with the $4 trillion mark that we are now back above on their balance sheet. So while they may speak hawkish, because they have to. Why? Because if they don't speak hawkishly, it's an admission that they don't know what they're doing. They've spent trillions of dollars. They have stolen trillions of dollars from the middle class. They made the poorer poorer, the richer richer. You have riots in the streets. You have Antifa. You have all these despotic little groups of people that are ticked off. And in some cases, rightfully so, and they did it. So they can't back off of their rhetoric. Watch what they do and don't listen to what they say. If you agree, please click that like button. Please. Thank you. All right, let's go to the pre-market activity. Now, overnight, as I said earlier, around 7:30 Eastern Standard Time, I just had my eye on, we traded the TNA. Right here, I'm looking at the screen. I'm doing something else, and I see on the side of my peripheral vision that we're breaking down below support. I checked the headlines. There's nothing out yet. And I checked gold to see if we're getting the inverse trade. Sure enough, we were. Gold was ripping higher. And I said, okay, something hasn't hit the headlines yet. But thank God that we are hedged, because gold, same time frame, was ripping. Now, we are up slightly this morning on gold. We did break out overnight. That breakout failed this last 4-hour bar. It is at current 5:10 in the a.m. Eastern Standard Time. This bar opened up here at 5 a.m. Eastern Standard Time, closes at 9 a.m. The question is, do we rally back and recapture, or do we fade here and struggle within this trading range for which we've been in for several days now? So we'll see. Now, taking a look at the dollar is rightfully so getting clubbed. They are going to take the dollar out. And I'll go over a chart of the pairs trade, US dollar, euro. Good morning, John. Yeah, thank you very much. In fact, I overshot the 1500 as well. So thank you very much for pointing that out. Yeah, good point. So what John is mentioning is that yesterday I was on, I had 1,499 YouTube subscribers, and it was like 2 days. And at one point I did have 1,500. Somebody unsubscribed, and I was back down to 1,499. You know, you get up at 5 a.m. in the morning and you do a live stream. You're half awake. You don't know whether or not you have everything right. Half the times I forget to put the mic in front of me because I'm worried about the technology. Sunday nights you're up and you're doing a live stream on a Sunday night, and you just want to get ready for Monday morning psychologically, but the live stream does help, to be honest. And you can't get over 1,500. You're one like away, or one subscribe away. So, yeah, great point. I did get over that 1,500 mark. Thank you very much. If you haven't subscribed, please do so. It keeps the momentum going on the channel. And YouTube sees it, and they lift my search results, so that helps out a lot. All right, thanks for pointing that out, John. All right, so the dollar, it looks like they're going to crush it. And again, this goes back to watch what the Federal Reserve does. Don't listen to what they say, right? The Federal Reserve is in there in perpetuity. They are expanding their balance sheet. They will continue to do so. Why? They have to. They have to. The banks are demanding liquidity. Why? I thought they're passing stress tests. I thought everything was great. Apparently not. So the dollar under pressure here. And apparently this is actually a bullish sign for the trade talks. Why? It's because when you watch the charts and parallels, meaning typically when you get negative news on the trade front, you see a flight to safe haven, meaning a flight to the bond market, a flight to gold, a flight to the US dollar. And normally the US dollar is the safe haven of choice. Take a look at the dollar this morning. The overnight headlines were that the Chinese are leaving early, no trade deal, no micro trade deal. What's the dollar doing? It's plummeting. That tells me that at some point in time that we are going to get a headline of some sort, at least the dollar, the currency markets are expecting it, a headline that will be bullish for trade talks and therefore bullish for the stock market. As for gold, I'm still worried about gold a little bit here. Very, very short term. We should have broken out and held it overnight. We didn't. So I can't speak my book. If I don't see positive price action in the face of what should be positive headline news, that's a problem. That's a tell. So I had to pay attention to it. Moving on to the S&P 500. You can see that we have rallied back. We're down slightly now. We were down a lot further overnight. The Dow was down over 300 points. Do I have the Dow up here? Perhaps not. I don't refer to the Dow as much as I used to, but I should for divergence purposes, meaning the Dow Jones versus the transports. All right, so we had the Dow down over 300 points overnight. We're still down slightly, and we are now bouncing back almost unchanged on the overnight session from yesterday's close. So I'm not all too worried here. Now, yesterday we went into the day, and the futures were bullish yesterday morning, and I said, you know what? I fully expect to go into the market open. Good morning, Trent. There's a monster long position on the dollar, but there are also big long positions in gold too. Well, yeah, the two have been trading in tandem of late. There's no doubt that there's been a change in the correlation, which is usually inverse. You're now seeing them trade more and more in line. So I'm not a big follower of the short positions on the dollar or the big money flows into the dollar. I simply just watch the chart, so you'll probably know more about it than I do. But good point. Thank you for bringing that up. Every bear comes bull fight back. Yeah, there's a bid under gold if that's what you're referring to. Yeah, no doubt about it. We're in that trading range, type trading range. So yesterday morning, we saw the futures higher, and I said that this is a pretty chart here on the Russell. I said that expect a strong open. I was betting that we would get a strong close, despite what the pundits had to say. We got that strong close. Yes, we definitely are at key support levels. Yep. No doubt about it. On a monthly basis, we are very, very close to key support levels. Good point. So yesterday, I said that we would probably see a strong open. I predicted a strong close. I did not predict the after-hours session, but overnight on my tweet, obviously, I was skeptical of the sell-off, and it just wasn't logical. And sure enough, now we are waking up to see the Russell 2000 not only not down. Remember, we went long yesterday of the Russell. We plan on adding more. We weren't aggressive. So I can't say that we went aggressively long and we're going to be long this morning. We're going to make a lot of money. We opened up a position, right? Small opening position, taking a wait and see approach. We scratched the itch. We have skin in the game now, and we'll add on strength. We'll send out trade alerts to members. So we have a breakout here on the 4-hour chart, which is great to see. Note all the topping tails at this resistance level, and we are now really trading significantly above it. We have reversed off of the lows of the session overnight. So the Russell is looking very, very good relative to the small caps. So the open looks bright, but we're only one tweet or one headline away from the algos going nuts in one direction or the other. Hey, Sam. How you doing over in Italy, brother? What part of Italy again? Sam is a frequent guest. He's over in Italy, which I'm so jealous of. I have my wife's cousins coming over from Italy. Great people this coming weekend. They live in Naples, very, very wealthy. They have a villa, very, very wealthy people, and they're coming over here, real fun people. And we're going to be meeting up in Manhattan. So the Russell looking good. Let's take a look at Bitcoin. Rose yesterday, big time. We're still below the 9,000 level. I think that we are bull flagging out here. We were overbought relative to the... Oh, Verona. Okay, very nice. Congratulations. I haven't taken a look at Baba. Intraday. How'd you make out? You went long with Baba, day trade. How'd you make out, Sam? All right, so we have not necessarily a bull flag, but a wedge formation forming here. I think that we're going to resolve this consolidation to the upside, especially as the wheels are starting to unwind or come off this this vessel of global economics, this Keynesian economics that we're seeing. The wheels are starting to shudder. and it's a scary place and time for global macroeconomics. Let's take a look at crude. Crude overnight had a volatile session in that we pulled back. Did they have all right, 4:57 a.m. TransGlobe Energy through crude average falls. I want to take a look at what the news was. Was it a drawdown or a build in crude prices? I'm not seeing it here. Why we sold off so hard? Maybe it's just on the trade front that they took it down. But oil has rebounded overnight from the session lows. Let's take a look at nat gas. And if you have any symbols you want me to take a look at, we have about another 10 or so minutes to go here. Nat gas is very, very weak. Very, very weak. We saw a sign of hope a few days ago as we defended this support level here on the 4th. That is now in the rearview mirror. Very, very weak. Not looking good. I did 163 to 166 on the gap. Baba, congratulations on that. Aces, good for you. Nice trade. Very nice. You know, you did a day trade. You know, a bit about me. I tried day trading when it was first becoming really prevalent back in the late 1990s, early 2000s. I just found it to be that I was way too analytical and I needed time to absorb what happened at the end of the day. How did we close? And that got ingrained in my head. And I just found it to be, you know what, part of my discipline was to wait until the end of the day. Watch how everything closes up because it matters so much that I just realized soon thereafter that I just wasn't, especially after the dot-com bust. I really needed to pay attention to the end-of-day price action because it resolves a couple of things. One, obviously, it doesn't matter where you trade intraday. What matters is where you close. One. Two, what is the news on the day after hours? And not so much, but three is more important. You don't impulse buy or sell. And that is very, very important because you're paying attention to the closing price, not the intraday price. Now, don't get me wrong. There are a lot of great day traders out there, and you're probably one of them. I am not one of them. You need to be aware of your strengths and especially your weaknesses and honest with yourself of what that is. And my forte is just simply not day trading. I wish it were, but it's not. Not that I wish it were, really. It's just not for me. And most people, wow, copper's ripping. Most people aren't skilled in day trading, especially when you're fighting algos, high frequency traders. The environment is just not really as equal as it was relative to when I was doing it. The game has really changed quite a bit. So those who are out there that are disciplined and that could really think quickly and react to these small moves in the market, I tip my hat. I'm just not one of them. So copper, surprisingly, this also leads me to believe that, yeah, day trading. Oh, thanks, Sam. Yeah, thanks for reinforcing it. Copper is ripping up higher. This leads me to believe that we're going to get a headline fairly soon on the trade front because you have copper ripping up higher. Why would copper be ripping up higher? Right? Because copper, Dr. Copper, is a signal that we have some sort of growth out there in the global economy. Let's see if I have, yeah, it's soybean prices. This is what, oh, look at soybean. Soybeans are moving up higher. Now, if there's not going to be a trade deal of some sort of positive agreement, why are soybeans ripping? All right, so these charts, this is a daily chart. Soybeans are very, very strong. Abnormally strong. Because when you take a look at a weekly chart, look at this consolidation here. We had been weak. We have now rallied off of the May lows. And this is not an equal line here. But we are flirting with a breakout. And I know most of you are not commodity traders. This doesn't mean much. I guess I am a commodity trader. I don't trade soybeans, okay? I'm not a futures trader. I'll put it that way. This is important because, again, it's a tell. The market sends you signals. When you have negative headline data that's forcing the stock market down, yet you take a look at leading indicators like the Dow Transports, which didn't do well yesterday. They were up, but they couldn't recapture support. I digress. But when you take a look at other leading indicators, which should be down, soybeans, copper, they're not. Why? Why aren't they down? Who's buying it and what do they know? So these are the questions that we need to ask ourselves, because the soybean market is on the verge of a major, major breakout. We have a higher low. We put in a higher high back here in July. I didn't even catch it. Now, after a pullback with the higher low formed, we're threatening to take out the July high. Is this not what you want to see as a swing trader, as a position trader? This is what we want to see. This is a macro setup here. This gets me excited, right? So these are the little bits of gems that you find that nobody else is watching, and we pick it off here. I'm going to be watching this chart along with copper very, very closely, because net, this should turn out to be bullish for the headlines eventually. It's not appearing in the headlines because smart money doesn't want you to know about it. That's why you're watching us here. And if you haven't already subscribed, please subscribe to my channel. This is what we do. This is what I live for, finding these bits of divergences. When the headlines tell you soybeans should be down because the Chinese aren't buying them, right? We have tariffs. We have a trade war. What are soybeans doing? They're beginning to rally. They're putting in a higher low, and they may just break out. Don't listen to the headlines. Watch the charts. Incredible. I want to bring up hit the wrong button there. I want to take a look at a weekly chart of copper. Now, I don't expect much here, but maybe I'll get surprised. This is still a weekly view of copper. And while not as bullish as soybeans, because we did break down below support, we're going to turn this now resistance level green because it's encouraging. So what we have here is a higher low, right? Weekly chart, higher low. Does it mean anything? No. But it's an observation worth watching, because if we begin to break out and recapture these support levels here, and especially this upper band of resistance after putting in a higher low, what is copper telling you? Dr. Copper is an indicator of global growth. So if copper begins to break out, then does that not mean that all the quantitative easing, which is expected, should at least goose the global economy short term? Longer term, there's going to be a price to pay. So what is the commodity market telling you right now? I'm getting long-winded here, and I'm sorry. It's telling you that there are, as Larry Kudlow used to say when he was so wrong back in 2010, when he was saying that the economy was growing organically, then the Federal Reserve had to go back to QE. We're seeing a little bit of green shoots here, short term. We'll see how it plays out. Watch the headlines, folks, for validation of these setups. By the way, I have a question. You said, watch the close. How do you distinguish a rally due to short coverage? Good question. Good question. Very, very good question. All right. So Samuel wants to know, how do you distinguish a rally between shorts covering and net institutional buying, which is really as William J. O'Neill of Investors Business Daily uses that analogy of a elephant entering a bathtub. And that's institutions entering a bathtub. The water overflows, right? And stocks rip up higher. You know it by watching volume. And you'll hear people dismiss volume nowadays as dark pools this. Give me a break. Watch volume. I watch volume. If I see stocks rallying and I see declining up volume and I see resistance immediately above, I avoid. If I see stocks pull back on light volume, then I look for a setup, especially at a support level. It works for me. So as long as it continues to work for me, I'm not going to listen to the naysayers out there saying that volume doesn't matter anymore. I find that ridiculous. So that's my answer to your question. I hope I answered that, Samuel. Did I? Hopefully so. All right, let's go to some of the stocks that we're watching. Let's go for another 3 minutes. And again, if we have any symbols that you're watching, I'll go over one or two. Let's take a look at TrenSpider. And again, 8:30 p.m. Eastern Standard Time. I will be on the YouTube webinar. Yeah, I agree. I agree, Samuel. Yep. I'll be on the TrenSpider webinar. Please click that link below. Join me tonight on the webinar. We'll have a great time. I'll probably take some requests as well. And we'll talk about the markets a little bit and my style of trading. I was on one of the webinars last night. It was very interesting. And I hope to see you there tonight. So let's go over some of my stocks that we're watching. I want to check out NVIDIA. All right, so NVIDIA, nothing's going on here. All right, so NVIDIA, we had a double bottom setup off of monthly support. This is a monthly chart. And what I was looking for was a breakout here and a continuation move higher. So we got most of what we wanted off of this W formation. Now all we need to see is a follow through and a close on a monthly basis above this upper band of resistance here at 187.73, and NVDA would be a buy. Let's take a look at a daily chart. See how we performed yesterday. So we had our alert triggered. We did see a rally off of that alert. This is the value of using trade alerts. Nestle, what is it? NSTL? Trent. So in terms of price action, we have gapped up. We've pulled back. Yesterday we saw a move higher, but we sold off the highs of the day, so it's a bit concerning. So I like NVIDIA. I don't love it yet. Hey, Pat. Good morning. Let's see if I can bring Trent's symbol up here. Nestle. Zwara, Trent? Do you want me to go over to Nestle or both Nestle and Zwara? NESN. I don't think that's a symbol for Nestle. Yeah, that's not it. If you could just confirm that for me, I'd appreciate that, Trent. I will take a look at Zwara. All right, daily chart on Zwara. You know what? I'm not going to break discipline here. Let's go with a weekly view. Let's go to a high level view. All right, so what we have going on here is that I'm using the Bollinger Bands, and I have the 20-period moving average, which is our normalizer. So at current, we have the 20-period moving average, which is declining, acting as overhead ceiling on Zwara. Now, what generally happens here is that we'll get a rapid sell-off and then a rally back, and we'll flirt with, like we did back here a couple of weeks ago, we'll rally back above that support level, and then we'll pull back. What that does is that it'll flatten out. It'll help flatten out that 20-period moving average. Then you'll get a pullback. Then it makes it all the more easier for longs or bulls to push the shares through that rise or that flattening out 20-period moving average. But at current, we attempted to rally through it. Have you done oil and gas? Yeah, I did, J.A. You can catch it on the replay, or if I have a minute, I'll run back through for you and we'll take a look at it, okay? So we have the 20-period moving average acting as overhead resistance. We do have good support down here at the 1348 level, so I wouldn't be a buyer just yet. Let's overlay monthly support. There's not much data here. I don't think there's going to be on the monthly charts. There isn't. Not much data here. So we'll take the monthly off, go to a daily chart. First, I'll overlay the weekly chart on a daily chart to get a feel for where we're at relative to weekly and daily support in a moment. And yeah, you could see that yesterday we closed down. So relative to the market, Zwara is weak, and we closed off the highs of the day. The 200-period moving average is acting as resistance. So I don't see this as being a buy just yet. If we pull back to this lower band of support, good stuff. If we break out above 1663, that's good stuff. That makes it a long. Let's put up a daily overlay. We'll take the weekly off. Yeah, and fairly, I would defer to the weekly overlay. We'll throw both up here. One is skewing the other. Actually, no, it's not skewing the other. They're consistent on the lower band of support. You do have a good support level here at 1358. So that may be a good entry point, but on an extreme pullback, you're looking at 13.07 as an ideal entry point, or if we break out above resistance. So all right, so Nestle. Is this the right symbol, Trent? I know it's an ADR. I just want to make sure it's the right one, because it's showing me OTC. Can you just validate that, please? And in the meantime, we'll come back to this. We'll go over JA's request for oil and gas. All right, so nat gas futures, we did go over earlier. We are pulling back. This is a weekly view. We are challenging weekly support. And on a daily basis, we're not looking good here. We broke support. We are up this morning. You know, I can't buy natural gas. It's weak, and it appears as though it's getting weaker. 4-hour chart. You can't buy it. I was bearish on it earlier this morning. I remain bearish on it at current because we just continue to break support levels. And until such time as we begin to break out to new higher highs, you need to avoid nat gas. We want to see a rally up and above this upper band of resistance, which is declining, so it's going to change. So I would keep an eye on the upper band of resistance. And once we get that breakout, we'll look to get long of it. So stay tuned in the future. Ask me again, and we'll take a look at it yet again. All right, so I'll go over oil. Oil is down this morning. We were higher earlier, but we have reversed off of those highs. So we're consolidating here. You can see on the 4-hour Bollinger Bands, ever tightening, right? We're going to break to one way or the other. So you need to defer to the overall trend. And at current, that overall trend is to the downside. So the probability is that we'll resolve the current issue to the downside, unless, of course, we get some positive headlines out of the trade talks. Going back to Nestle. Yeah, let me bring up stockcharts.com. Yeah, NSRG Y is the symbol for that trend. NESN's not coming up for me. Good morning, Bill. How you doing, brother? Thank you very much, Bill. Appreciate it. 1,500 and rising. Good stuff. We're getting popular. So, yeah, let's go over NSRGY. We'll go with a weekly view. Yeah, it is. I love their chocolate bars. Weekly view. Let's clean this up here a little bit. Let's remove the overlays. All right, so the first thing that pops out at me on Nestle is that we have broken trend. Right? So we have broken trend. We've rallied back in an effort to try to recapture. We have failed. So what you want to do is watch for support to get retested right here at the 105.52 level. We'll see if it holds. To me, on a weekly basis, I wouldn't buy these shares. I don't like the break of the uptrend line. Let's throw up some overlays here. First, we'll go with a monthly overlay. Now, the monthly overlay is telling you that far stronger support is down at the 102.43 level. Now, for me to get involved with this trade, if I had to get long of it at some price point, I would defer to this support level here because there's a lot of data on Nestle, and TrenSpider is picking up that data going back years. So this tells me that this is historical support rather than looking at these micro views of recent support levels, I would rather defer to historical data and use this rising, what was an upper band of resistance should now act as a lower band of support if the shares are healthy. If we break the support level, we're back down into a prior trading range, and I would not buy these shares. At current, if you're dead set on getting long, buy at this upper band of resistance, which is rising. So my price point at current is going to change, but at current, it is at 102 spot 54 daily chart. Same deal here. Here's that weekly overlay. Let's bring up a daily chart. We are in a trading channel at current. We are at the upper band of that resistance level. Since we have broken weekly support, which is right here, my guess is that this will get resolved to the downside. Could we break out? Sure. I wouldn't buy these shares until we got a convincing breakout, ideally on a weekly basis, above this upper band of resistance here. At current, I would not buy these shares. Alibaba. Patrick, I see your note there. I don't want to ignore it, but believe it or not, I have a conflict of interest with Uber and Lyft, so I really can't comment on them. So forgive me for not being able to comment in any way on Uber or Lyft. So my apologies. Any other companies, sure, but if I have a conflict of interest, I will state that and say I cannot talk about either one of them. So I hope you can appreciate that. All right, good point on Nestle. If it's not a good dividend player, why are we involved with it, right? It should be a good, it's a consumer staple. You would hope that in a time of crisis, when this market does come under pressure, that we do get some sort of a dividend to support it. Thanks, Pat, for understanding. Let's go to, I think, Baba, right? We're going to leave off with Baba today. Let's see if my alert is still, I don't know if it's still active. All right, so Samuel was long yesterday. He day traded it. Congratulations. Let's go back to our high-level view. Ooh, okay. Let's remove this alert. It did fire. All right. So thus far this week, we have an outside reversal week on Alibaba. Now, it's Wednesday, right? So anything can happen. Perhaps we'll rally back by Friday, 3 p.m. Eastern Standard Time. That final hour of trade will be rallying back, and maybe it's a buy. But at current, at this point in time, I would avoid like the plague, daily chart. Because what matters most, what's the hierarchy? The weekly chart over the daily chart, right? Multi-time frame analysis. So we want to respect the weekly chart relative to the daily chart. We did try to break out yesterday, but we were rejected. I know you day traded this, Samuel, and again, congratulations, but I wouldn't be a buyer here of Alibaba. Now, if, as I predict, given the performance of copper and especially soybeans, and the rally back in the futures market today, I'm predicting that we do get a positive headline out of the trade talks. If we get that positive headline, expect Alibaba to rally. Agreed, Sam. And with that, folks, hey, listen, please join me tonight on the webinar with TrenSpider. 8:30 p.m. Eastern Standard Time. Click the link below. Also, if you haven't already done so, Please take our survey. It takes about 2 minutes and no personal data requested. And I get a lot of value, and I'm already incorporating it into videos. I'm learning a lot, and thank you very much for being honest. Sometimes it stings, but I love the constructive feedback. All of it I appreciate. And please click that subscribe button, hit the like button. It really helps me out with the YouTube algorithms, because what they'll do now, unfortunately, is that YouTube will offer up CNBC as a sponsored video, not a sponsored video, as a recommended video rather than the small guy. And I think that, frankly, the small guy, not just me, but other people out there, have a lot more to say that's just honest and not biased versus CNBC. One man's opinion, you can have a different one, and I respect it. Bill, you have a great day too. Everybody have a great day. Make it profitable. Don't trade the headlines. Wait for that final hour of trade, and be well.